Hello, everyone.
Welcome,
That's
everybody.
all so far. I'm excited to have some of the security titles legal experts for this month's webinar. And you've seen the title, you've seen the bullet points. I don't have a whole lot of information that I really want to get into in this intro. I'm going to get through as quick as possible, but we're familiar with the timeline of the scalding hot housing market during the height of COVID. We're familiar with Fannie Mae announcing attorney opinion letters in their selling guide spring of 2022, the waiver pilot spring of 2023, the State of the Union spring of 2024 with a new renewed pilot, and then a whole lot of mentions of junk fees. There are many published reasons why the housing market, ultimately the consumer, are suffering. Many people are looking for an alternative to their current situation. So we can understand why these headlines have gotten so much traction over the last 2.5 years. Despite being put in the spotlight for negative reasons, the title insurance industry has used it to educate and kick back against false information. As I said before, we're joined by 4 of Security Title's top legal experts. We have John Kosogof, Bill Slover, Vince Danzi, Doreen Strothman. They're going to answer questions about junk fees, why title insurance is on the defensive, and what anyone needs to know about the alternatives to title. So jumping right into it, who wants to take the first stab at the junk fees topic? What's the standard definition, and what do you make of it being in the headlines and having title insurance lumped in with it?
Well, let me just start by saying it's unfortunate that title insurance, which is a rather obscure industry, when you ask most people about it, they've got really no idea what it does for. But it's unfortunate that in the headlines, in such a light cast by the federal regulators that are looking at various fees, mostly for items that are actually necessary in order for a loan to be able to be funded and closed. And they look at all these fees and they lump in everything that a consumer needs to pay to get that loan or to buy a property. And one of those fees happens to be the title insurance premium. Title and premium is paid once, and that's at the settlement when a purchase or refinance is made. And it's either good for the life of the loan or it's good for as long as the person owns the property. So from that perspective, I don't think the latest news on the subject is accurate. I mean, junk fees, those that be defined as a fee for necessary product service. Title insurance is a necessary product. When you buy a house, you want to make sure that the person you're buying from actually owns the house. The lender wants to make sure that they're going to get a first lien on the house. There's no other liens. So that's my perspective. Doreen or Bill or Vince, any comments on that?
Well, I mean, I agree. I mean, I find, when they label title insurance as a junk fee, implicit in that, of course, is that there's a fee for junk. And what is junk? Junk is something that is worthless. We know that that's not the case. Title insurance didn't originate as a fee. It originated as a service for which a fee was charged. The market existed before title insurance. People bought and sold real estate. And it was because of the inadequacy of things like the same procedures that will guide the title waiver program and the attorney opinion letter program. Those paradigms were not sufficient, and it was seen that the industry needed some backstop to protect the solvency of the real estate transaction. So I do object just to the whole idea of calling our fee a junk fee. It's a type of, it's an actual line item on the closing disclosures for decades now, promulgated by some of these same regulatory players that we're now hearing these alternative programs coming from. So I would agree. I think that the whole idea of lumping us in with junk fees just kind of shows a misunderstanding of us as an industry. as a service.
You know, Vince, you raise an interesting point, how title insurance came about. I heard Bill talk about the history of title insurance and the genesis and the reason it came about, and that actually had to do with title opinions. Bill?
Yeah, sure. I'm sure most of the audience knows that the case that is always cited as being the beginning of title insurance, or the case that caused title insurance to come into existence, is a Civil War era case out of the city of Philadelphia, and an abstractor who also prepared the deed gave an opinion about a title, and on the basis of that opinion, the transfer of the fee simple interest closed. And later on, his opinion turned out to be incorrect. That is, a lien that he had said did not attach to the fee, in fact did. And so that person got sued by the purchaser, and his defense, his winning defense, was that I didn't commit negligence. I behaved in a reasonable manner under all the facts and circumstances, and if I turned out to be wrong, I shouldn't be held responsible for it. And the court agreed with them, because what he was doing was suing in tort, right? Duty, breach, causation, and damages. And after that, somebody came along and said, well, maybe that decision was rightly decided, but that doesn't do a buyer any good. What we need is a contract. We need an insurance contract that the purchaser and the lender can count on. Business people want certainty. So that's how the title insurance business came into existence. And I hadn't thought of this until Vince said it just now, but what these proposals are doing are in one sense, trying to turn the clock back 170 years to go back to title opinions. So I think that the point's well taken, that what we do is we provide an insurance contract. And that contract satisfies lender and it protects homeowners.
You're right, and you bring home the point, you underline it, that people are touting, well, title opinions, lawyers can write title opinions. Well, that's true. Lawyers don't live forever. Lawyers don't stay in practice forever. I wasn't around 170 years ago, but way back at the beginning of my career, I wrote a few title opinions. Now I think I know more than I knew then, but people relied on those title opinions. And I haven't heard any issues about them, so I guess they were okay. But it's been at least 40 years since I've written a title opinion. And I don't know, Doreen, have you ever had the pleasure of writing one? I mean, you work for banks, and you've had a varied career as far as in mortgages and stuff like that.
Yeah, and I did. I wrote title opinions, and in most cases, I think there were no issues. But the fact that the firm I was with at the time was around for a long time, kind of backed up, that will be here is an issue to fix it. But oftentimes, that isn't the case, and eventually that firm did close. So, if issues came up later, then, I don't know if they would be able to track me down or not.
Well, there you go. And that's the problem for consumers. If the law firm that you relied upon is no longer in existence, the lawyer died, and all of a sudden now someone's foreclosing on your house because they had judgment that wasn't disclosed in the opinion, or there was a mortgage, or there were certain other issues. Someone's knocking on the door because, hey, my dad died, and it was only my brother that conveyed title. I own half the house. Who are these poor people turned to? A lot of the programs that they're also touting would actually give no coverage or protection to insurer, because they're looking at making them easier. So there'll be some type of lender, which, by the way, will entail risk. Lenders will price that risk, and consumers will be essentially the amount to cover the lender, but they'll be flanking. They won't have any coverage. At least that's my opinion on the matter. It's an unfortunate thing that go ahead, Bill.
No, I was just going to say, I wanted to say one more thing about the word junk fees. To me, a junk fee is something that is only disclosed in the usual meaning. It's something that's only disclosed after someone has made a commitment to purchase something. And I think that our agents would do well if they ever hear that word to say, wait a minute now, any title insurance fee that was going to be charged was disclosed up front, or at least it should have been. And therefore, whatever else can be said about it, it's not a surprise. And I just wanted to make sure that for those people who throw around the phrase junk fees, meaning hidden fees that are sprung after the fact, that our agents are aware that and are ready to say, wait a minute, whatever else one wants to criticize title insurance for, it shouldn't be a surprise to any educated consumer.
You know, and I would actually add a little bit to what you were just saying, Bill, that, you know, to the extent that you apply a more, you know, nuanced definition to junk fee, and it's not just a fee for junk, you're right, it's a fee that is sprung on someone, inadequately disclosed, and it's really hard to put title insurance in particular in that bucket when you consider that there have been for many years now, 50 years actually, since RESPA was passed, a whole regulatory structure for the disclosure of title insurance in particular, and even tolerances for how much those fees can change over time. To add title insurance as a fee that is not only of questionable value but also of suspicious disclosure is really, it's inappropriate. The whole loan estimate closing disclosure process is all about facilitating the consumer's ability to shop for, in particular, title insurance.
Yeah.
Great.
I think the other thing is that you mentioned something, you know, the junk fee infers that the title insurance is of questionable value. And, you know, that's really ridiculous. Oftentimes, title insurance is going to cover a title issue that could become, some of them become very expensive. Some may even become more expensive to resolve than the value of the property that they protect. And most homeowners are not in a situation where they can afford to pay for attorneys' fees and costs to resolve the issue. You know, if all of a sudden it's going to take $20, $50, $100, $500,000 to resolve this issue, I mean, they're kind of, I don't have the ability to do that, and you're losing their property. So it's not that title insurance provide the service and the value that the person paid for. You know, it's totally inaccurate to make any claim to that effect, just because most people don't necessarily have a title that they're aware of. And I say that because sometimes there are title issues that the title companies take care of before a settlement that they're never even aware was a problem, or, you know, hardly aware that it was a problem. But, you know, I think that, you know, the fact that most people don't think they're ever going to have a title issue doesn't mean that the protection isn't there. Most of us don't think our houses are going to burn down, but, you know, if it does burn down, you know, we want our insurance to cover that. And the same with title insurance. If a title issue would arise and it's something the policy covers, we want that to step forward and take care of that. And that's what we do every day.
You raise a good point there, and I'm sure that Bill and Vince can speak to that subject too. We've heard one of the criticisms is that title insurance is not necessary because that would only pay out 3 or 4 or 5% premium in claims compared to other types of insurance, casualties insurance, that pay out 80, 70% of the premiums collected. Doreen, you hit it right on there, that the money that these people spend, they're spending actually to examine title, to clear title of issue before they actually take title. I mean, would you rather have a situation where that was done, you're in your home, and all of a sudden you have a lawsuit filed? Title insurance, they go, well, yeah, that's true. But I've been involved in many situations with claims where the litigation goes on for years and years and years because of the nature of litigation. And for all that time, these people can't do anything. You know, they're stuck with this cloud over their head. So it's well worth the while. So I look at it this way. If there's only a 3% claims payment rate, man, that means we're doing a really good job, because 97% of the time, our people who purchased our policy also purchased peace of mind. They have the peace of mind that they're going to enjoy their home. They're going to be able to refinance it whenever they want. They're going to be able to sell it whenever they want, because of the fact that the title work was properly done. Any issues were identified and taken care of. It's like boiler insurance or elevator insurance. The value of those is not that you get paid if your building blows up or if the elevator crashes. It's that there's an inspection beforehand. Any deficiencies are identified and they're forced to be repaired before the policy is issued. I mean, as a building owner would rather have that type of protection than have all the headaches that come from a building that's exploded, and the unfortunate loss of lives that come, and of course all the losses. Yes, the insurance policy protects in that regard too, but it's a lot better to avoid all those problems. And that's really the value of title insurance, which unfortunately people and all these quote unquote experts that really don't know anything about product, nor do they know much about real estate transactions, other than the fact that they may have purchased or refinanced, and then they don't understand what they bought, which is unfortunate, because they should have asked questions and that would have been explained to them. So that's from my perspective. And Vince or Bill, I'm sure you issues as well.
Well, you know,
these are our agents. No, go ahead, Vince.
I was just going to say, I think, John, you teed it up there well, and I think you're highlighting a very important fact rhetorically about our product, and that is that the mathematics involved in looking at claims ratios and how much of the premium dollar is spent on actually settling claims is really, it's a picture that's very much unlike most forms of insurance. A lot of the premium dollar is spent in really preparing the subject matter of the insurance. It's spent, you might even think of it as, if you were to analogize car insurance, and instead of just looking at claims payments as a percentage of your car insurance premium, but you were to include in that the cost of maintaining the roads and the traffic signals and things like that, that actually help to prevent the accidents, you'd have a better understanding, you'd have a more analogous picture of what actual claims expenditures are in our industry. The fact is, most of the premium dollar is spent before you even getting to the notion of how much you're going to have to be spending on the disasters that occur. You're spending money and resources on preventing those disasters. But it's like catnip to regulators and to opponents of our industry. They look at our ratios between payments made and premium dollars charged, and it's just hard to get over that initial hump of explaining the value of our product in that context.
Not to beat a dead horse, but I want to follow up on what Vince said. Our audience here is title agents, and it's for you all to forthrightly, if you ever get challenged on this, when you get challenged on this, to say forthrightly, look, most of the money that is paid at the closing table for title insurance has been is going to pay for the risk reduction that got us here. That is, the work that the agent does ahead of time requires employees with skill, training, and experience. And they have to be paid according to their skill, training, and experience if you want to keep them around. And so those are the people, the title searchers, the examiners, the clearance people, the closers. Every one of those people understands that this is a business in which dotting every I and crossing every T is kind of the point. That's what a record is, a public record. And that's where the money goes. And I think if you're an agent, you should tell people that, because it's not obvious. It just goes right along with what both Vince and John were just saying about the value and the cost of the title insurance policy is something that is not apparent to the average consumer. And you're the agent, you're out there, somebody, takes a shot at the title insurance business. Tell them point blank that my employees are the reason that the title insurance, what my employees do is why the title insurance claims rate is 3%. And without it, there wouldn't be any security title or anybody else willing to write a policy.
And Bill, just to reinforce what you're saying also, a lot of people also have a misconception of what our product costs, irrespective and in spite of the disclosures. So often you will have checks cut to title agents that are for tens of thousands of dollars. And naturally people question that and they say, wow, how is all this money going to the title agent? But in actuality, the title agent is oftentimes the uncompensated collection agent for counties with their taxes, creditors that are owed money. Downstream, we actually, in one way, we're guaranteeing the conveyance of those funds through insured closing letters. And this is all happening in the background, and it's all enabling all these creditors and tax authorities to be paid in a timely way and in a proper way. And we really don't get any credit for that. We actually get blamed for that.
Yeah, that's true. And we have to keep perfect records. Just let some regulator come look at a title agent settlement account and have it be off by $50,
Right.
Well, and it's a good point there. These are payments made at the settlement table, but before you can actually make those payments, you've got to locate and identify every creditor. You've got to research the taxes and assessments that are due. You've got to find the unknown heirs. You've got to make sure that you're dealing with the right lender. And we've got a whole nother layer of issues in today's internet environment that we have to deal with, and that's cybercrime. We read stories in the newspaper about people that have lost hundreds of thousands of dollars. I just read one of a Silicon Valley tech exec that ended up wiring her $400,000 payment to a thief based upon an email she received with regard to a purchase of the home that she was going to buy. Obviously, she didn't get that house because she no longer had the $400,000. So we as a company are proactive in educating the agents. The agents are proactive in educating realtors and lenders and consumers of the things that they need to do in order to protect themselves against those types of risks. But we have seen claims come about as a result of these thefts where someone buys a property and guess what? They were dealing with the real owner. So these are all types of issues. And if that happens in a scenario where there's no longer title insurance involved, who's going to protect the buyer that put down $100,000 for that house? The programs that they're talking about just protect the lender.
Great. Well, thanks for, I don't even, I guess I'll try to move on to the next section here of title insurance it's been put in a negative spotlight, but a lot of people in our industry have used it for the better to educate use the spotlight to get the word out. I haven't been in title very long. Y'all have. Has title insurance ever been in this type of spotlight? And has title insurance ever been on the defensive like it currently is the last 2+ years?
Well, Bill, you mentioned the RESPA. RESPA is Real Estate Settlement Procedures Act. It not only deals with title insurance, it deals with the whole mortgage, purchase mortgage process. If I remember correctly, maybe someone can jump in. It was I think it was a senator from Wisconsin that was quite irked at some of the fees he saw on his closing statement that he didn't understand. And by God, he was going to create a law. And the next thing we knew, we had RESPA. So in that regard, back then, there was certainly some negative press as to title insurance and the fees that were being charged, as well as the fees for settlements. As a title insurance company, we don't control what is charged at the table. The only thing that we have any say with regard to are the premiums. And so I think the issues were addressed 50 years ago when RESPA was enacted. And then, of course, there were regulations promulgated to enforce RESPA. Vince, you talked about some of those regs and the fact that for the last 50 years, the federal regulators as well as state regulators have been telling everybody what can be charged, how it can be charged, how it can be disclosed, and all of a sudden now, last 50 years we've been telling you how to charge junk fees. So I mean, is that what they're telling everybody now? Oops. I'm not sure that the regulators really thought about this. It sounds like a good political line, if you will. I mean, we're in an election year, and I'm not casting aspersions against one party or the other. I think that they're all jumping on the bandwagon, or not all, but many are, because it's something that sounds good to the consumer. Why does it sound good to the consumer? Because the consumer doesn't really understand the value quotient of title insurance, doesn't understand protection being offered by title insurance. So that's where it's the title agent, that's where it's up to the industry, the title underwriters, to educate the consumer. I mean, Doreen, would you buy a house without title insurance?
No way. No way I wouldn't.
Why not? That's money that you could save. Take that $2,000 and stick it in your pocket instead. Buy yourself a new living room set instead.
I was going to say, for the same reason that I buy insurance on my home, if something happens that, I don't expect, or especially if it's something I'm not responsible for, I want to have insurance to protect me so that I can keep my home, rather than lose it because there's an issue came up and I simply couldn't afford to defend, or, it's just something that I'm not able to handle myself. So, it's a fairly modest premium that title insurance costs. And as you said earlier, it's just a one-time premium. You don't have to pay annually to maintain it. It's a deal for people. It really is. And, when something does come up, a title issue, you want to be able to, pick up the phone or email and say, this is what's happening, what can you do to help me? And you want that help. You don't want to be just sitting there on your own thinking, this is my home. This is, I've got almost all of my wealth invested in this property. I can't lose it, and so you want the help of a professional in that industry to, step forward and take over. You don't want to lose your property.
Absolutely. I just actually changed insurance companies, but the premium was close to $2,000, and that paid every year. So when you to title insurance and then saying, well, what's the risk here? Well, I don't know. I've lived all 60 years, and in those 60 years, I've never lived in a house, either my parents or myself, where a claim was actually filed against the insurance on the house. Is there a need for it? I don't know. That's 60 years of premium that's been paid and never one claim paid. You drive around, people talk of insurance in the house as fire insurance. Fire isn't right, but how many fires, for the members of the panel, and we'll just say we'll live the next 100 years collectively. I mean, how many houses have you been in that haven't done? None. So that's collective 200 of experience. Why bother with the insurance? Obviously, there's very little risk, but yet I understand the homeowners they need it. Why? Well, in case the house burns down, someone's going to pay me. That's what Arena's saying. But what's the reality? 200 years of experience here, and we've never had a house fire. Well, that could all change. All 4 houses can burn down tomorrow. Hopefully that doesn't happen. But, so that's the value that the people understand risk, even though none of them have ever experienced it. None of them have ever seen anything in their block. None of them have relatives where it actually ever happened to. But yet people pay that money, and with insurance going up drastically for all these other types of insurance, they're paying as much per year for that coverage as they do for title insurance. And in most markets, when buying a house, your lender wants the coverage. So to protect yourself, the additional premium that you pay is rather minuscule compared to all the overall cost. I mean, the average house in America is well over $300,000 now. I mean, isn't that the risk to cover it? So has the industry ever been defending itself from the accusation like we currently see? Yeah, some time ago. But just like now, we offer something very, very valuable that unfortunately most people don't understand.
John, I think you actually raised another very important point that I think needs to be emphasized, and that is the impact that these alternative programs are going to have. And Doreen, you also brought up something similar, but the impact that these programs are going to have on the homeowner and the interest of the homeowner is important. And if you read the actual the press releases and the request for information from the CFPB, part of their justification is, well, we're not telling people they can't get owner's insurance. We're not telling them they shouldn't get owner's title insurance. We're just talking about these mortgage, the mortgage insurance and what we'll require as the backstop financial facilitator of these mortgages. But that is really a too simplistic way of looking at this. The fact of the matter is that how the federal government treats title insurance on the lender side has an important secondary effect on how many people are going to be purchasing owner's title insurance, how much they're going to be spending on it. And it is not something that you can easily extract one from the other. Most of the time when you have a purchase, the policies are issued simultaneously. So trying to somehow unwind and extract the lender's portion from the owner's portion is very problematic. And even if you look at RESPA, 50 years ago, you have some parts of RESPA are very new, some parts of RESPA have been around for a very long time. Section 9, which is one that you don't often hear about, is not a regulation on borrowers or lenders. It's actually a regulation on sellers that says that sellers cannot choose the title company. They can't force the buyer to use a certain title company. And the reason for that is because of its secondary impact on the cost of mortgage loan financing. But it's a good example. It's maybe not a well-known example, but it's a good example of how these issues on the lender side bleed into the entire market overall. And Drew, to your question, has the industry ever been confronted with this? To my knowledge, the industry has always had to deal with outsiders looking in and wanting to be assured that resources aren't wasted. Before RESPA, there was something called the Blue Book, which was a manual put out by the FHA on how on what types of closing costs they thought were acceptable when it came to closing loans that were facilitated and subsidized by the federal government. This is nothing new, but there's a lot of moving parts here, and just trying to separate one little piece of it without thinking about the overall impact on what it's going to do to the market in general is not a good recipe.
Sure. We had a question come in from Gregory Flynn, so thanks for the comment and the question. It's more of a comment. He said the best way to describe title insurance is by way of claims examples that relates it personally. And great point. If the larger topic doesn't change a whole lot and the specific examples do, and how can we essentially explain the value of a necessarily complicated product such as title insurance when the people that we're trying to convince may be coming into the conversation with these biases due to this easy to digest information?
Well, that's a good question. And sometimes I hear the objections to title insurance. Well, you searched the title, didn't you? So why are you making me pay to insure the fact that you searched the title? You could step back and scratch your head and say, well, yeah, that's kind of a good question. But here's an example, and we've got 3 cases of this right now. Title was searched, a mortgage is found, they paid off the mortgage, and they move on. However, in one of the cases, 6 months later, the homeowner received a foreclosure notice. The claim, we looked at it, we looked at the title, there was no indication that there was an open mortgage. You read the foreclosure documents, and in the foreclosure documents, they're asking the court to strike a satisfaction that was recorded in error years previously. So nothing was wrong with the title search, everything was good. And in here, you've got a lender that discovered a clerk filed a satisfaction mortgage that shouldn't fit. The mortgage was paid until the house was sold, and there was no payoff for that mortgage because it's shown satisfied a record. So we've been litigating with the lender on behalf of our insured, and that is a huge value of title insurance to the consumer, because the cost of litigation isn't capped the policy amount. So if a person has a house for $450,000, that's not the cap of our exposure, because our exposure also includes the cost of the litigation, the attorney's fees. If it costs us $600,000 to cure that, now hopefully it doesn't, because hopefully we're able to get that resolved. But we've got 3 claims very similar to that. We've got another claim where the mortgage was paid off, and the lender showed that the mortgage was paid off, and they're about to give a satisfaction. And all of a sudden, they say, oh, it's going to take another $200,000. Where did that come from? Well, there was an HOA fee, but hold on. We checked the HOAs, and that's the Homeowners Association, in case there's consumers listening. And we got a payoff for $4,000 as part of the documentation, the research that done to get this settlement. Well, it turns out that somehow they forgot about this $200,000. The lender servicer received a bill for $200,000 without asking, without thinking, and this was after the mortgage was paid off. they dispersed that $100,000 and they were demanding to be reimbursed before they released the mortgage. Now, if the consumer is only, if the program's is only protecting the lender and they're relying on a title opinion, the title opinion is going to be limited, or excuse me, is going to be limited to liability as to those state of facts that exist the date that they did their opinion, right? On the date that that opinion would have been issued for either that mortgage that was erroneously released or for the homeowners association that was trying to collect $200,000, that attorney would have no liability. There'd be no coverage for the buyer for that property. If Doreen was the consumer, she would have nobody to turn to assist. They'd be on their own. And bottom line, you know what that means? They lose the house.
Vince, Bill, what do you guys think? Doreen, how do we share stories? How do we come up with the best, most compelling stories that if someone has a "it'll never happen to me" attitude and they don't care about the upfront work that goes into it, what are you guys' thoughts?
Well, I like to go back to, when I owned an agency, and I owned one for a long time, I always like to talk about the comparison to what I always referenced was Hartford Steam Boiler and Machine Company. If you wanted to buy steam boiler insurance for the apartment building you owned, Hartford sent out a mechanical engineer, and that person did an inspection and then issued a report and gave a list of recommendations for maintenance and repairs. And I think sometimes Hartford Steam Boiler and Machinery would just pass along the bill to the proposed insured and said, well, you got to pay this guy and you got to do all the repairs. And then we'll say an insurance policy for X dollars. And I can imagine that in some circumstances of the purchaser of the apartment building before he closed said, well, I don't care about all those repairs and I didn't hire the mechanical engineer. I'll just pay you the insurance premium. To which I assume Hartford Steam Boiler and Machinery said, wait a minute, you don't understand what's going on here, right? The only reason we're going to say in the policy is because you're going to do what he says and he's going to get paid for it because nobody works for free. So to me, I always liked that story because then, of course, the next thing I would say was, well, I'm that mechanical engineer and I get paid a part of the premium. You don't get a separate bill. I get paid part of the premium. It gets rolled in there for everything that I'm doing. So to me, that always made sense. If you compared it to now this isn't a contrary to what, I guess I'm not answering the exact question that Drew asked, which is, do you have an example of something that a claim that would be covered by title insurance, but not by an attorney opinion letter? Yes, I could certainly think of those. Any member of this panel could. But I like the idea better of saying, look, what we do is we reduce risk. And that's why we're valuable. We reduce the risk. What we do is reduce the risk from the 70, 80, whatever, pick a number, percent that homeowners insurance and auto insurers pay out in premium down to 3%, which is what we pay. The reason it's only 3% is because of all the stuff you don't see that we do. So that's kind of my take on it.
Would you guys be able to, sorry, go ahead, Vince.
I'm just saying, Drew, if you want a specific example that just kind of popped into my head about a risk that it is hard to see how an attorney opinion letter could ever deal with. You know, in New York City, there are building departments and different regulatory departments for the city. And some of those departments can create a lien by simply posting an invoice on a bulletin board. in a physical office somewhere in the city. And there's not just one of those, there's a few of those. And it's hard to see how you could ever really 100% actually be assured that you have clean title at a closing. There's always going to be some casualty risk there. And the attorney opinion letters just don't go there. They
They'll
can't go.
They'll exclude them. Yeah.
Great.
Well, you've written attorney opinion letters and you received them as a bank attorney, Doreen. What are your thoughts on that?
Well, I think, it's just obvious that the problem is the attorney opinion letters have some of the same issues that a title agent has, in that, you're getting a title report, you're interpreting it. But the thing that comes up is when there is a problem that wasn't detected in that review process, who's going to help the property owner? Who's going to help the lender? I mean, if the lender isn't covered, maybe these programs will have some protections for the lender they don't have for the property owner. But if the lender isn't covered, then the lender's cost of lending goes up, and that cost is going to be passed on to consumers. They're either going to have a harder time getting a loan, or they're going to pay more for that loan because the lender has suffered losses. Property owner is even worse shape in that they either are facing a cost they really cannot afford to try to fix problem, or it's the problem. Maybe the problem ends up, somebody's making a claim, files a case, they're wrong. And in the end, property owner's position is out. But if the property owner to that case, then they lose property. And, most of the time the property is somebody's home, and it's their biggest investment. And, that's just not something that most people are willing to take a chance on. And if they understand what the title insurance will do for them, I don't think most property owners really would choose not to have that protection, because they cannot afford to $100,000 worth of litigation costs. They can't afford. They don't have the knowledge or experience to try to resolve the issue themselves. So they really oftentimes are at risk of either losing the property or losing part of the property, or somehow having their ownership interest diminished. And that's just not acceptable. So you've got to, you look to the title insurance for that protection. And I think one thing we haven't said too, the title insurance is part of the insurance industry, and it's regulated. And there's standards that we have to meet in order to issue title insurance policies. If those same kind of standards are not applied to the attorneys who are issuing these opinion letters, then, there really is no guarantee that something goes wrong, that there's going to be errors to be had from these insurance. They're not going to have reserves. They're not going to have had to meet certain capital requirements. They're not going to have their people have to be licensed, certain numbers of their people licensed. They're just, just an attorney with a practice, hopefully in the real estate area. But, there's very just limited backup to that. If they miss something, or if there is something that couldn't have been found at that point, then the property owner and maybe even the lender, may be out of luck.
Well, you're correct on that. And hopefully the attorney has a good E&O policy, but E&O policies, errors and omissions, are like homeowners insurance or auto insurance. They renew every year. If he retires, he's not going to maintain that policy. But you know what? I'm going to string together things that you have said, Vince, Bill have talked about. We've talked about the different searches. Bill, you've talked about the fact of who's the engineer here that makes that examination and finds what's wrong. And you've talked about, well, what happens when something is missed? How is the consumer going to take care of those issues? They don't have the knowledge or the expertise. Well, I'm going to assume that the attorney is really good. They did a great job, and they've got a whole list of objections to title. Consumer, what does the consumer do? They've got their opinion letter. It's got all these objections to title. There's 4 judgment, there's 2 tax liens, there's 3 unreleased mortgages. Now what? Going to, and there's building department issues. And as Vince said, where do these consumers go? They don't have the knowledge, the expertise, the training to tell them how to take care of these issues. Well, they can hire the attorney to take care of these issues. I don't know if people have been pricing attorney's fees lately, but we pay out a lot in attorney's fees with regards to claims, and it's anywhere from $250 to $400 an hour. So it takes that attorney, let's say 15 hours, let's just pick an average rate of $300 an hour, 15 hours at $300 an hour. Now it's cost this consumer $4,500 to clear the title so they can buy it. Did they save any money? Was that a junk fee? No, that was valuable because now they can actually move in with clear title. So now they are paying the hourly rate for the engineer, as Bill was saying, take care of it. Now they're paying that hourly rate to someone that Vince identifies that knows where to go to, that Doreen was talking about, where do we go to correct this stuff? Because the consumer's not going to be able to take care of that on their own, right? Now, obviously, everyone can be an expert. You go to Google and you this and that. We got a claim from someone that went to Google and thought that he knew everything, but unfortunately, what he found on Google wasn't the answer, and it's unfortunate. But those are the things that the consumer will have to think of, and that's, I think, probably the most important thing. Now that I've said it, that is overlooked and missed. That yes, title opinion letters are great. There's problems with title opinion letters, but even with a title opinion letter, who is going to be the person to fix all those issues? No one works for free. There is no such thing, free lunch. Someone's got to do it. And if the title lien is no longer now not involved in not being compensated by virtue of the payment of the title premium, you got to pay someone to do it. And or the homeowner is going to have to take off a few weeks and run around all over the place. I mean, judgments. I mean, how many times, or even old mortgages, how many big lenders have gone out of business in the last 20 years? How many times, I mean, in many states, they don't even file assignments of mortgage, so you don't even know where to go. And we're the ones with the experience. How is the consumer going to know where to go? How is the consumer going to know who to contact to get the judgment released? I don't know. I guess we'll let the regulators figure that out. Maybe the federal government can go and cure all these poor people.
Great. Well, we touched on attorney opinion letters a whole lot, and not sure there's much more to say. The backup quarterback's everybody's favorite position when when the starter isn't ideal. If the consumer is just seeking an alternative, any alternative based on the situation, we can see why there's just a blanket blind need for that. What is the benefit to the consumer? The consumer is wanting an alternative. Many articles, State of the Union press conference, have been put out this verbiage recently that they want to keep the consumer in mind. And specific instances are what these alternatives are being proposed, and it clarified, saying that the waiver pilot will be for refinance instances. Attorney opinion letters, same vein. How is the consumer going to benefit from a coverage standpoint, and how is the consumer going to benefit from a cost standpoint? Because that's the end result, is we want to help the consumer. Everyone in headlines on TV saying that everything I'm about to tell you is the right thing because I'm here to help the consumer. How much is the consumer being helped in terms of coverage and cost with these alternatives?
I'd like to jump in there. If the attorney opinion letter became an industry standard, if everyone will forgive me a little immodesty, I certainly would be an attorney who would qualify to be able to give attorney opinion letters. I search titles. That's how I put myself through law school. I've been an agent for many, many years, running my own agency. So I certainly would be able to issue attorney opinion letters. And I guarantee you that if I were ever to issue one, I would have all kinds of qualifications. Number one, I'm not covering misindexing. Well, there goes something that a title insurance underwriter covers right there. That's just one of 100 different, I could think of all kinds of exceptions. And if I tried to cover any of those things, bounce checks, I don't know what else. If I tried to cover any of those things, I'd have to tell my malpractice carrier that now is going to insure me as an attorney opinion letter writer in the title field. And every time I told them that I was going to cover something else, they'd jack up my annual premium, heaven knows how much. So just for starters, there's that. I mean, I don't know how much money actually would be saved. So especially since, as John points out, you know, I have to renew that insurance every year in order for it to be kept in effect for the people whose opinion letter I sent my letter to. I mean, how much of a savings can that be?
Great points.
Well, I don't think there's any savings for the consumer. They talk about, you mentioned, Drew, refinances. And that is a great example too. There wouldn't be any coverage for the homeowner on a refinance that we would be considering because they already own the home. They're just refinancing their mortgage. So it's only the lender's interest that's really involved here. However, it's the homeowner that's got to pay for all this, for all the services and the title insurance. So is there a cheaper way to go? Well, yeah, attorney opinion, he's only going to charge $500. Well, that's great. The lender gets attorney opinion letter. Oh, wait, we've got this issue, we got this issue, we got this issue, we got this issue. Consumer, go take care of it. Because the lender's not going to take care of it. All right. Who's going to take care of it? There's not a title agent involved, so they're not taking care of it. So it's someone's got to pay to get those issues taken care of. And that means they turn to an attorney because that's the attorney that wrote the opinion letter. Oh, that'll be 15 hours, $300 an hour. Did they save any money? No. Did they save any time? No. Was there a benefit to the consumer? I don't think so. But it's the politicians and the regulators following the lead of the politicians that are saying, oh yeah, we've got to do these things. And they have absolutely no concept of what they're trying to regulate. They have no concept of what they're trying to create. And so they go about it all wrong. Title insurance really is the cheapest, most effective alternative in assisting consumers and lenders. When you look at the overall pricing structure, if you looked at all the costs, yes, a dollar amount looks, a few $100s or a few $1,000s looks like a lot of money, but that pales in comparison to the other fees being charged by the lender. So it's a very cost-effective product that allows a consumer to refinance or purchase a home.
Great points. So I will conclude this with an attempt to give each, the three of you, your best elevator pitch here. We've spent a lot of time, shared a lot of examples, a lot of knowledge, and what I'd like to have people walk away from this webinar with is a new way to cut through some of the noise, the negative noise about title insurance. And it is a necessarily detailed thing. There's a famous Einstein quote, and to my knowledge, he never worked in title insurance, and he said that if you can't explain something simply enough, you don't understand it well enough. So I'll say respectfully didn't work in title insurance. So it's not as easy as it sounds. So I'm going to put the three of you on the spot. And if you were to advise an agent that may have a new hire that is looking to go out and go talk to realtors and go talk to consumers, and they're up against someone who says title insurance is a scam, instead of saying the standard lines that you hear that it's cheap, it's a one-time payment, it's these other things, but the problems are that they simply don't understand the value. So they don't care that it's cheap. They don't care that it's a one-time payment. They don't know what they're paying for. If you would advise someone one or two sentences as succinctly as possible, what is the value of title insurance and why do you need it and why is it not a scam and a junk fee? Because Doreen, I'll give you the floor. Start with you.
Okay. I guess I would just say that title issues, real estate title as an area of the law, it's very complicated. Even after, more than 30 years working in this industry, I still will open a file and find an issue that I've never confronted before. It can just be very complicated and many things can go wrong. Fortunately, most people, own property and title issues never do crop up. But when they do crop up, they can be very expensive. And because they are complicated, because the records that you need are not easily found, and just many things that make it difficult to resolve. So I think people need to understand that for the premium for the coverage that you get is a best deal going, and you just don't dare go without that coverage because you could lose your property, and that's simply not something that most people are willing to do.
Great. Bill, how about you?
Well, I would say first, if you get challenged with a question like that, don't get defensive. Just say, it's not an easy question to answer. And if you'll let me buy you lunch someday, I'll be glad to, explain it in as close a detail as you want to hear.
John, what do you think?
It's not an easy answer. It's not an easy answer, and it's not an easy topic. When you look at title insurance, real estate, because that's for ensuring that you own that real estate. People think, well, of course I own it. I live there. Well, that's great. Or, they just built the house. Well, the thing is that land, and that's what we're ensuring, that you're titled for the land, that's existed ever since the Lord created the earth. Okay, so it didn't just miraculously appear today. Real estate is impacted by bankruptcy law, by corporate law, by family law, probate law. All of these issues interplay and can impact the ownership to that piece of property. Because if you look back through the chain of title, that property was owned by someone every step of the way, all those years. So what's the value of title insurance? Well, you want to make sure that, for the last 200 years or however long the state's been a state, because we'll just go from that point forward. If someone has had an interest in that property and something occurred with that property, and there could be skeletons in the closet, much like you want to be comfortable in an automobile that you're buying, as far as that a used automobile, because every piece of property is really a used car. There's nothing new from the factory with regards to real estate. Every piece of property is a used car. You would like to have some assurances that that used car is going to get you from here to there, and it's going to get you from here to there for as long as you own it. Obviously, there's risk involved in one, and there's risk involved in the other. But the beauty of title insurance is you buy that title policy, and and that gives you your peace of mind that you're going to own and enjoy that property without someone knocking on your door and telling you that it's part mine, it's all mine, you better pay this mortgage off or we're going to foreclose on you. Can't get that with a used car. So, and you can't get that with any other type of product. So from my perspective is, do you want the peace of mind or don't you want the peace of mind? You want to fly naked? God bless you. You know, maybe you'll be lucky. And hopefully you are.
Thanks for sharing that. Title insurance sure seem the impact to probability matrix. Title insurance certainly falls in the low probability, high impact, with claims being 5 and 6 figures. So you sure love to have, if you're walking across a minefield, love to have a professional tell you where the mine is, disarm it, and then give you protection in the event that they didn't disarm it properly. So personal homework to everyone is to figure out a great metaphor that they can share potentially in a situation like that, that speaks to the upfront work, the preventative work that prevents a major impact that is similar to what a claim would be. Hopefully all of you learned something, whether it was a new story, whether it was a new detail about title insurance itself. If any of this helped jog a really compelling story that you may have forgotten about, hopefully that's the case too. If there's anything from this webinar that you want to revisit, if there's a story that you wanted to listen to again, I'll be posting a recording of this on our website, on our YouTube channel. Thanks everyone sticking around for a little extra time. As I said, title insurance is a necessarily complicated thing. There's a lot of ground to cover. We covered a lot of ground. So thank you, Doreen. Thank you, Bill. Thank you, John. Thanks to everyone that attended. I appreciate it. And short survey that'll pop up when we're all done. And see you next time.